Thank you. All right, guys, we are done with the first standard, that is SLFRS 15. Can you guys tell me what is SLFRS 15? Revenue from contracts with customers. What are the 5 steps recognition of revenue? Anybody can remember the 5 steps recognition of revenue? Identify the contract with customers. Identify the performance obligation of the contract. Determine the transaction price. Allocate the transaction price to the performance obligation. Last one is what? Recognize the revenue only after the performance obligation has been transferred or satisfied. You remember the 5 steps? Very important for the exam. They ask theory question. The question which I asked is tested in final paper when it comes to SLFRS 15. 5 steps revenue recognition. Today we are going to discuss another standard, second standard, right? I gave an order, right? What is the second one? Is it LKS 37 or 2? LKS 2. This is a very simple and important standards, right? LKS 2. Anybody, right, we call these inventories. The name of the standards. So you guys are familiar with this. All of you have the tute, right? Any students who don't have the tute? 1, 2, 3, 4, 5, 6, 7, 8. Sorry guys. We don't need the tute for the moment, but anyway. Tell them wrong. Another 12. 12. 12. 12. 12. Yeah, 11, 12. Another 12. Come. Make it fast. I'm waiting for you all. Right. There are few students still registering. Tell me, any one of you here, why this standard is important? Why they have introduced a standard, Lanka Accounting Standard 2, for accounting for inventories? What is the reason for that? The importance of inventories, tell me. Inventories can be generally recorded when it comes to advanced level syllabus, 3 places, maximum. Maximum, we record inventories generally 3 places. Another 2 more places, but it's not very important. 3 places adjustments, very, very important. Can anyone help me? What are the 3 places we record? Sachila, answer the call. Right. What are the 3 places we record inventories? Everyone knows this is not standard. Don't forget about the standard. What are the normal 3 places we record inventories? One is the main place, statement of financial position. Under the heading current asset, you write the first current asset, right? Generally you write stock. Another word, inventory. So this is one place you record it in the statement of financial position under the current asset. So generally, if anybody asks what is inventory, always say inventory is an asset. Other explanation give later. If anyone asks what is inventory, your definition should be, your explanation should be, inventory is always an asset. That's the explanation. After that, I'll tell you what standard says and all that. But first point, right, inventory is an asset. One place. Tell me another place we record inventory. When calculating what? Cost of sales. When you're calculating cost of sales, sales minus cost of sales. So when you calculate the cost of sales, you need to consider opening stock, purchases, then you need to also consider the closing stock. When examiner just say inventory, they are referring to the closing stock. When they just say inventory, it refers to closing stock. So generally, right, closing stock is deducted from the cost of sales. Guys who have done UK exams like CIMA, ACC and all that, the treatment of that is different from treatment of local syllabus, right? The whatever you studied there, if you apply here, you don't get marks. Because in UK syllabus, generally, cost of sales, what you record closing stock, the same closing stock, you can record it here. In UK syllabus, closing stock, what you record under current asset, and the closing stock, what you record under cost of sale, always the same. But in A-level syllabus, if you do like that, you never get marks. In A-level syllabus, the closing stock that you record under cost of sales, different from closing stock that you record, same stock, but the values are different. Assume you're running a marker business, you have some stock of markers, right? Inventory of these pens. Then the value of this, what you record in cost of sales, the closing stock value, and the closing stock value, what you record under current asset, generally in advanced level syllabus, two different values. Two different values you record. Then there's a one more entry you record for, recorded generally in advanced level syllabus. That is, there are some expenses we categorize it. In the profit or loss statement, we categorize the expenses. What are the expenses we categorize? Distribution expense, administrative expense, then you say other expense, then you write finance expense. There, in that category, under other expense category, you write one more entries for inventory related one, right? These are the most common way of testing and explaining. So this is one entry, this is another entry, and the other entry. So you call that entry generally inventory loss or inventory write-off expense. So everyone tell me, what are the three places? What are the three places, right? You can record the inventory. So what are three places we can record the inventory? One is statement of financial position under current asset. Another place, in the cost of sales calculation, you record the closing stock. Then these two, when these two are different, sometimes, most of the time in the exam, let me write this: opening inventory plus purchases minus closing inventory. When you write this closing inventory, I'm just telling this is 100,000, right? And this closing inventory, let's say 95,000. Different. But we call this closing inventory. This also we call the same word, closing inventory. But the values are different. When these values are different, the difference between this is always recorded as a other expense. You guys know 9,500 difference is what? 5,000. That 5,000 is always recorded under other expenses, inventory write-off expense. So generally, how many places we record inventory, tell me, in the financial statement? 3 places. What are the 3 places we record the closing stock? One place, closing stock is recorded as a current asset. Closing stock is a current asset. Second place, closing stock is deducted from purchases when calculating cost of sales. Third one, the difference between these two are generally recognized as other expense. There are different categories: distribution expense, administrative, and other. You recognize as other expenses. You call it generally inventory loss, inventory write-off expense. In addition to this, there are lots of other adjustments for inventory. You can say goods drawings, goods stolen, goods damage, right? Goods donation. Some companies donate goods, right? Some companies, you know, the person who is in charge for warehouse, he steals the goods, goods stolen. All these possible. Then accounting is what? Other than the goods drawings, inventory drawings, other than that, all others are, because drawing is never an expense. This is never recorded as an expense. Drawings are never recorded as an expense. Other than the drawings, all other Inventory related. If you say inventory stolen, somebody has stolen the goods in the business. How do you recognize it? Or inventory donation. How do you recognize it? Or inventory damaged. Damage due to any reason, right? Damage due to flood, fire, anything. Goods, some goods have got damaged. Any of this, we record same way. Under the heading other expense, you write it. So if you come across inventory donation, inventory damage, inventory stolen, if you come across in the exam, where would you record that? Under the heading what? Which expense is that? Other expenses. Goods drawings, we don't record as expense. Goods drawings you record in two places. One is in the equity. It affects the equity. It's deduct from the capital. Goods drawings are deducted from capital. Another one, you deduct from purchases. When you adjust the cost of sales calculations, goods drawings are adjusted. Another adjustment for goods drawings, under the heading equity, we deduct the drawings. Drawings are deducted from capital. Understanding? So this is not recognized as an expense, but all others are recognized as an expense. Those are additional things. But this is not very important. What I explained before was important. Now I'll come to the standard. What I explained is general thing. Now, in this standard, now you all know, if inventory wrong, definitely your current asset wrong. If current asset wrong means your statement of financial position is out. If inventory wrong, definitely your cost of sales calculation is wrong. Cost of sales wrong means your gross profit is wrong. Then your net profit is wrong. Not only that, if your other expense will be wrong, definitely. If your other expense wrong, again a problem in net profit. So your profit or loss statement is affected, and your statement of financial position also affected because of inventory stock. Is that clear with all of you? Yes. Now we'll come to the standard. What we are going to talk about in LKS 2. LKS 2 explains around 7-8 points, not many. Only 7-8 points you have to remember, right? So I don't have to give a very detailed explanation. It's not necessary, right? I'll explain, try to explain, not possible to finish it in one class, right? You might have to take about 2 classes to finish the inventory. But first of all, write a small introduction. What are those 7-8 points we are going to talk about, right? So write down LKS 2 inventories. This is the second standard we are doing. What's the last standard we started with? SLFRS 15, revenue from contract with customers. Revenue from contract with customers. This is the second standard we are doing. Second standard, LKS 2. Second standard, LKS 2. Right? Online guys, I will send you the tute. You don't need the tute for the moment. I'll give you the tute. LKS 2 inventories. First point, you can write it down. First point, you can write definition of inventory according to LKS 2. Or just say definition of inventory. No need to say LKS 2, LKS 2. Definition of inventory. Definition of inventory. Definition of inventory. Second point, very early. Second point, definition of inventories. I'm not going to give you the definition now. Later we'll discuss it. Costs that are included. Costs that are included. Second one, just point form, write it down. Number 1, number 2. Like don't leave space. Don't leave space. One after the other, right? Just what and what you need to remember. So at a glance, you can see what are the things you need to remember for inventory. Then you don't have to study the whole note. By reading this, if you remember all of this, you don't have to study the note also, because you remember. First one, definition of inventory. Definition of inventory. Second one, costs that are included. Costs that are included. First one, definition. Second one, costs that are included. included in cost of inventory? Because some students have a problem, what type of cost to include, what type of cost not to include. That is always confusion with some students. Value added tax, whether to include or not, right? Import duty, whether to include or not. There are storage expenses, inventory storing, whether to include the storage expenses. A lot of students have their doubts how to arrive at the cost of the inventory. So we will study that, costs that are included in cost of inventory. Because if cost of inventory wrong, everything is wrong. All the accounting records will be wrong. I told you 3 places we record. No point of recording in 3 places. All 3 places answers will be wrong if the cost of inventory is wrong. So you need to know that. Cost of inventory. Then also study costs that are not included in the cost of inventory. There are some, I will separately give you that as well. Write down. Third point, costs that are not included. You can write the plural, costs that are not included. Costs that are not included in the cost of inventory. In the cost of inventory. Number 4. Number 4. Net realizable value of inventory. You know what is NRV? Net realizable value. Simple term, you know what? Selling price. Simple. Very simple to understand. Buying price is cost. Simple. Simple way of explaining. Buying price is the cost. Selling price is the... Number 4, write down. Net realizable value of inventory. Net realizable value, abbreviation. Net realizable value. Net realizable value. NRV. Guys, what is the simple term for the NRV? Simple term? Selling price. Selling price is NRV. Cost, simple term? Buying price. Buying price is cost of inventory. Selling price is NRV. Right? But there are different costs, mean there are a lot. NRV mean there are different things to consider. But these are simple way to understand. Right? Okay. Number 5, write it down. Measurement of inventory. Measurement of inventory. Number 5, measurement of inventory. Number 6. Number 6, inventory recognized as expense. Inventory recognized as expense. I don't have to even tell you that. These answers are very simple, guys. I already explained in the profit and loss account, 2 places you record inventory. Those are expense. Tell me 2 places. One is cost of sales. Another one, other expense. Inventory recognized as expense. Number 7. Number 7, write it down. Inventory cost formula. Number 7, inventory cost formula. Number 7, inventory cost formula. Number 8, disclosure of inventories. Disclosure of inventories. Guys, all of you tell me how many points to remember in LKS2? How many points you got to remember in LKS2? All of you, 8 points. If you can remember all these 8 points, you are excellent. You are very good in that particular standard. There are so many standards like this, but this standard you are expert. If you can remember all that 8 points. Clear? First, right? Definition of inventory. Write down definition of inventory. You guys know the first term for the definition of inventory. What is it? What is inventory? I told you this before. Huh? It's an asset. That's the point. So, what is the definition of inventory? Definition of inventory. Guys, please understand, all of you. in a very simple way to explain, because some students' problem is remembering it. They can't memorize, they have a problem of memorizing, or even if they memorize, they don't remember that for the long period. Then easy way to remember the definition, I'll tell you, right? You don't have to actually memorize this, you will understand it, right? Definition of inventory, if you look at it, remember about 2-3 words, only the words, not the sentences, right? Inventory, first thing, it's an asset. Inventories are assets. It's held for 3 ways. It's held in the form of, don't write it, finished goods, work in progress, and materials and components. You can even say raw materials. Definition of inventory. This is the definition. How you define an inventory? Inventory is an asset that are held in the form of finished products. Finished products. Now if you're running a furniture business, complete furniture. It's an inventory, right? Or work in progress, incomplete goods. Finished goods or incomplete goods. Or you can have what? Materials, right? Raw materials. So that's the definition. But according to the standard, they don't say this definition. They say in detail. You don't even have to write detail in the final paper. It's better to write the detail if you can remember it. If you can remember it, it's better to give the definition which I'm going to tell you. If you don't remember that definition, write this, you'll get marks. Examiner can't cut marks, right? Inventory is an asset which is held in the form of finished goods, work in progress, or raw material. That's the definition, right? So I'm going to give you what is finished goods. I'm going to give you what is work in progress. I'm going to give you what is raw material. Explanation of individual. That whole thing will be the definition. So write it down first. Then later you write my definition. This is better definition, easy definition. But first write the LKS 2 what it says. Write down. According to LKS 2, did you put the point numbers also? Put it. Number 1. We are doing number 1. According to LKS 2, inventories are defined as an asset. According to LKS 2, inventories are defined as an asset. Inventories are defined as an asset. Inventories are defined as an asset. Held for sale, assets held for sale in the ordinary course of business. What do you mean by ordinary course of business? The normal business that you do. Held for sale in the ordinary course of business. Guys, what is that held for sale out of this? Out of this, what is held for sale? Finished product. So within bracket write finished goods. Within bracket write finished goods. Finished goods. Within bracket write finished goods. Or, continue, or in the process of production for such sale, or in the process of production, which goods are in the process of production, or in the process of production, continue the definition, huh? Or in the process of production, in the process of production for such sale. In the process of production for such sale. Guys, which goods are in the process of production? Huh? Work in progress. Within bracket write work in progress. Within bracket write work in progress. Or in the form of materials, or in the form of materials or supplies. In the form of materials or supplies, or in the form of materials or supplies, to be consumed in the production. To be consumed, in the future we will use it, to be consumed. In the form of materials or supplies, materials or supplies, in the form, to be used, materials or supplies to be used, in the production process, to be used in the production process. To be used in the production process or rendering of services. Because some materials are used in providing services or rendering of services. Or rendering of services. Guys, little lengthy definition because they're explaining everything. What is finished goods? It is held for sale in the ordinary course of business. What is work in progress? It is in the process of production of such sale. What is raw material? It is materials and supplies to be consumed in the process of production, right? Or rendering of services. They're explaining it. Suppose if you forget this, write the simple definition. Write down alternative definition. Alternative definition, write down. You can write in 2 lines. You can write it in 2 lines or 1 line. What is the definition? Inventories are assets. Inventories are assets. Guys, alternative definition. Huh? Inventories are assets that are held in the form of. Inventories are assets that are held in the form of. Inventories are assets that are held in the form of. In the form of what? Held in the form of. In the form of finished goods, work in progress, work in progress, raw materials. In the form of finished goods, work in progress. Very simple to remember. No, you can't forget this definition. It's easy to remember. Inventories are assets that are held in the form of finished goods, work in progress, or raw materials. Or raw materials. Guys, second point. First, done with the first one. What is the second one? Huh? Second point. Heading right. Elements of cost of inventory. Second heading. Elements, another word, components. Elements, another word, components. Elements, another word, components of cost of inventory. Elements or components of cost of inventory. So guys, any one of you here tell me how many components are there in the cost of inventory? Guys, how many components are there? Any one of you here? When you look at the cost of inventory, there are 3 components, right? Remember all 3. When you add all of them, you call it cost of inventory. Again, that depends on the business. Some business you will not have 3. Some business you will not have 3. Some business you will only have 1. Some business the 3 divided into maybe 30 or 20, seriously. Then you add all the 30, that is the cost of inventory. So it's very difficult to say business to business, it varies. But you need to have a broader knowledge. Don't just memorize. Everyone tell me, cost of inventory, how many components? 3 components. Very good. What are the 3? Write it down below that, all the students. Following are the components of cost of inventory. Following are the components of cost of inventory. Number 1, we call it cost of purchases. Very simple. Cost of purchases is cost of inventory. Buying goods, purchasing goods. Another one, cost of, if you can write plural because there are many, right? Of conversion. Let me explain to you that. Don't worry about the cost of conversion. I'll explain, right? So inventory cost has 3 components. Cost of purchase, cost of conversion, and you call it other cost. Other cost. So sometimes they ask standard questions. These are not my explanation. Huh? I'm just describing what LKS2 says. I am just describing what Lanka Accounting Standard 2 says. Cost of inventory has 3 categories. Cost of purchase, cost of conversion, and other cost. So if examiner asks you in your final paper, writing area 31 to 50 question, they always test standard. Just I'm asking, right? Only this standard. How many questions in last paper? Only this standard. How many questions in last paper? Guys who don't have the tube? Tell me, how many questions are there? Anyone? You got the tune? All have the tune? Yes. Guys, I'm just, for understanding purpose, take the page number 12 or 13. Take the page number 13, all of you. Page number 13, all of you take. Please. Page number 13, 1-3. Guys, question 9 is which from connected to inventory. Question 10 connected to LKS inventory. That means page 13. Page 13, question 1, question 2, you read it. Right? Then question 22 connected to inventory. Question 46, question number 1, question number 2, question number 3. How many questions only from this standard in 2019 paper, the last paper? 4. Out of 50, 4 mean almost like 10%, 8% from this tiny standard. This is not a big standard, small standard, but 4 questions are tested connected to that. Understand, you know why I'm asking you to check it like that? Some guys don't take it serious. Some guys, only when they see full of paper standard, lot of standards, then it's important. Very important, tested. Understand it's tested, believe me, very important. So all the standards, you need to have a very good knowledge. Then you can be very confident of company accounts. Also, you can be very confident of the accounting 1 paper. A lot of questions are tested. More than 10 questions will be there in your paper, right? Only on standards. Okay, guys, move on. Now, tell me, you guys know the 3 elements. Cost of purchase, cost of conversion, and the other cost. Cost of purchase mean what? Any one of the students. Tell me around 5 elements of cost of purchase. I'm taking only the cost of purchase. Tell me around 5 things. Okay. Import duty. Included or not included? Shipping cost. Included or not included? Now, country like Sri Lanka, if you are manufacturing something, you do a manufacturing here. But the materials and all, you import from another country. Now, a lot of factories are affected. Do you know that? A lot of factories are affected these days because factories, problem, you know what? They have the laborers, they have the machineries, they have the place. They can't import materials because they are not making the raw material. They're importing from China, most of them. Most of them, they import from another country. So if you import a material, all the cost connected to the import added to the cost of purchase. Other than some illegal fees, other than some abnormal fees, other than some, unavoidable, the extra unexpected fees, other than that, penalties, compensations and all that, other than the normal import related, all the cost added to the cost of purchases. So what is cost of purchase includes? What do you mean by cost of purchase? First we say, assume now you're going to import some materials from China, right? You're running a factory here. You want to, after you get the materials, you will convert to the finished goods. And your normal inventory, now generally, examiner's point of view, cost of inventory means cost of finished goods. Examiner won't tell that. Examiner won't tell that in the question because you have different types of inventory. Finished goods is one inventory. Incomplete work in progress is another inventory. raw material is another inventory. But when examiner just say inventory in the exam, what they are referring to is finished goods, finished products. So what is the cost of finished products? Only I'm explaining. So there are three components of cost of finished products. One is cost of purchase. When you generally say cost of purchase, meaning cost of raw material. You need to understand the meaning of that. But this is not the real point. We are going to find out the cost of finished goods. We are going to find out the final product cost. But for you to find out the final product cost, you need to start with the initial raw material cost. So raw material cost, in another word, they are telling cost of purchases. Right? It's one type, but what is included in that? Start with the normal, okay, the price, what they are telling. Suppliers will tell different prices for materials. Assume one supplier says the price of material is, let's say, 1 million. But that supplier says, we give a discount, 20%, and we are happy. It's another component, but it's a reduction, trade discount. Trade discount. If the government also giving some benefit to us, we are very happy. You call it rebates. Rebates mean reduction the government give us. Right? You call it subsidies, grants, government grants. If you get something like that, we are very happy. Supplier also giving support, discount. 20% discount they are giving. So 200,000 reduction. So 1 million material, we are going to buy only for 800,000. 1 million material, we are going to buy only for 800,000. So if the government also giving us grants or subsidies, we are very happy. We can deduct that also, right? Then you can have so many pluses, right? Increase in cost of inventory. So can you guys quickly tell me what are the costs connected to the imports, right? You can have shipping cost. Shipping cost when you take, right? Take it including of shipping insurance, including insurance. What insurance, guys? Shipping insurance, right? So assume it's about 50,000 or 150,000. Shipping insurance about 150,000. Then what else? Then you can have import duties. Import duties. Import duties. Import duties, let's say 100,000. Right? Now, it's a country like Sri Lanka, sometimes supplier will tell 800. Our government will tell 300% tax, 200% tax. Then you have to pay more than 1 million for the government to get the tax. That happens for the vehicles and all. Vehicle price and outside the Sri Lanka very cheap. But when you want to get the vehicle to Sri Lanka roads are on gold, no? Right? Very gold plated, very, very expensive roads. That's why they are charging so much to maintain that. Right? So they charge 200% tax, 300% tax. Normal Mercedes Benz and all, you can buy it for even 4-5 million, 6 million. You can get a very good car. But in Sri Lanka, it is 200 lakhs, 300 lakhs. Why? Because of the import duty. So even materials, they charge import duty. Plus what? You can call it clearance charges, clearing charge, clearing, or you can say handling fee. So that's around, let's say, 50,000. Then you can have what else? Loading, unloading charges. Container loading, container unloading, right? If they have given loading, unloading, so because materials comes in containers, right? You need to load it, cost is there. Unload it, cost is there. Even after you unload it, you sometimes put it in maybe a lorries and all that. You later take it. That is also another charge is there. So all kind of charges. Can't say what and what. Many charges are there. So all that, right? Because you need to understand what do you mean by cost of purchase. Our guys, you know what they think. Cost of purchase. What you pay for suppliers. What you pay for suppliers is on 800,000. What you pay for suppliers is only 800,000. That's not the cost of purchase. Everything is cost of purchase. Right? What else? Loading and unloading charges. Any other guys? Local transportation. Assume this is shipping mean from China to Sri Lanka. Then Sri Lanka, your factory is not in harbour. Your factory is in, assume, Polonnaruwa. Then from harbour to Polonnaruwa, you have to take the products. Then there are other charges, right? That we call carriage inwards. Carriage inwards. Sometimes you don't buy imports. You don't do imports. You do local purchase. When you do local purchase, all these are not there. Local purchase, all these are not there. But loading, unloading, yes. Even lorries, loading, unloading charges there. Laborers' fees. Then carriage inwards, lorry charges. Lorry charges, another word, carriage inwards. Try to understand, when you do local purchase, mostly, you can have VAT. Value added tax, VAT. Do you add or you don't add? Any one of the student? VAT. Now guys, when examiner give it, you can't have a doubt. You need to decide whether to add or not to add. If you decide add, add it. Not to add, don't add. Simple. You need to know that. Anybody here? Dulina. Right. Come on. Value added tax. What's this guy's name? Sanjay. Why are you looking down? Right. Tell me guys. What about VAT? Simple question. What about value added tax? Do you add or you don't add? Depends. Sometimes we add, sometimes we don't add. You need to read the question very carefully. If they tell you in the question, business is registered for VAT, don't add it. If the business is registered for VAT, VAT is always recorded in VAT account. Registered business always maintains something called VAT account. Who maintains VAT account? Only the registered business, VAT registered businesses. They will tell you in the question. We are not magicians. They will tell us. They will definitely tell you. Some guys don't read it. So if it is a VAT registered business, they prepare a VAT account. All the VAT recorded only in the VAT account. Another one is cash account. So it's not never recorded in the any other places. Registered business, all the VAT is simply recorded in the VAT account. If you are paying money for VAT, understand it, cash credit, VAT debit. Not inventory debit. Inventory debit is wrong, right? Cash credit, you're spending money, and debit the VAT account. So remember, registered business, VAT, never added to the cost of inventory. In your paper, they purposely give you non-registered business. Our guys very busy in doing questions, they don't read it, right? Non-registered business. If they have given you non-registered business, that VAT you can't claim from the government because you're not registered. You can't claim. Then it's a cost of inventory. You need to add to the cost. So write down, right? Important one, VAT for which business? Don't just write VAT. Which business? Tell me. VAT for which business? Everyone. Non-registered business. Non-registered business. I am telling non-registered. Our guys will add for registered also. Registered don't add. Only non-registered add it. You have to check the question carefully. So assume loading, unloading charges 10,000. Carriage inwards 30,000. VAT is around 70,000. VAT is around 70,000. So all these when you add, you will get an answer. How do you call that answer? Cost of purchases. How do you call it? Cost of, start copying. So you have written 3 elements. Take each element and explain it. Write down a first one. How did you write the 3 elements? A, B, C or 1, 2, 3? How did you write 3 elements? You put some now. 1, 2, 3. Then same way you write that and then write cost of purchase and write a small explanation. Cost of purchase includes following cost. Cost of purchase includes following cost. Otherwise you just memorize cost of purchase. Don't do that. Cost of purchase includes following cost. Cost of purchase includes following cost. Cost of purchase includes following cost. Copy. List price of raw material. Cost of purchase, another word for your reference, for your studying purpose. All these one word, cost of raw material. Because you're buying a materials from China, assume. So all the material cost. Right? Cost of raw material we call it. Cost of raw material. Okay. So copy this. Quickly copy. Cost of materials includes what? Cost of materials includes what? Cost of materials includes list price minus trade discounts, add the shipping cost or cargo or freight cost we call it, import duties, clearance, clearing or handling fee, right? Loading, unloading, carriage inwards, VAT for non-registered business. Non-registered business VAT, it is added. Be very careful in the exam. One small thing, if you don't read in the exam, they will tell you registered business. Our guys don't read that. They will add it. 0 marks. Just because I have added, don't go and add. Non-registered business, add it. Non-registered business, add. Finished. How much the total cost of purchases? Total cost of purchases. How to find out cost of inventories? One is cost of purchases. So all these, we call it cost of purchases. Another word, raw material cost. Raw material cost. Right. Second one, write it down. Have you completed all of this? Some guys are very, very fast. Very slow. If it's not clear, my handwriting is very, very bad. If it's not clear, tell me, I can dictate. I can read it out. Okay, write it down. Second one. Still writing? Right. Quickly, finish. Write fast, please. All right. Second one, cost of conversion. Any students tell me what is cost of conversion? Number 2. Inventory cost has 3 elements. Cost of purchase, cost of conversion, and other cost. What is cost of conversion mean? Excellent. Excellent. So that's his explanation. Write it down. Costs that are incurred. What is cost of conversion? I'm explaining. Cost of these are the costs incurred. Guys, heading is cost of conversion. Below that, right? These are the costs incurred to convert raw materials into finished goods. These are the costs incurred to convert raw material into finished goods. So all the conversion, everything. These are the costs incurred to convert the raw materials into finished goods. Please understand, all the students. What do you mean by conversion cost? What is the meaning of that? Now we say the cost incurred to convert the raw material into finished goods, because raw material cost is already there. I have already given you number 1, raw material cost. Don't add the raw material cost again, it's already there, number 1. So other than the raw material, all other factory expenses, one word, conversion cost. So conversion cost, there are easy way to understand conversion cost if you have done manufacturing account. We assume it here, we manufacture the product, inventory. You're running a furniture factory, you make the furniture. You're running a garment factory, you make the shirts. You stitch the shirt. That means you import the fabric and you stitch here. So you're having a factory. So in the factory, what happens? Raw materials are converted to finished goods. All the costs that are incurred to convert the raw material into finished goods, we call it conversion cost. So conversion cost includes, other than raw material, all other factory expense. What is DL? Direct labor cost. Very good. What is DE? Other direct, or ODE, whatever, right? Other direct expenses. Then what is it? FPOH. Fixed production overhead. There are production overhead 2 types. Some are fixed, some are variable. Fixed production overhead is rent. In a factory rent is a fixed. Factory manager salary is a fixed. Factory supervisor salary is a fixed. Factory building depreciation is a fixed. So all the factory expenses will come other than the raw material. So conversion cost mean all the factory expenses other than raw material expenses. So guys, variable production overhead. So another word for these two, In the manufacturing accounts, we have studied manufacturing overhead or production overhead. The word production should be there. This word overhead, don't look at it. Production overhead or factory overhead, another word. So this is what conversion cost. Another word of explaining conversion cost. Total manufacturing cost. That means everything. Remove the raw material. From the total manufacturing cost, remove the raw material cost. You will get the conversion cost. Or from the total cost, he came 1 hour ago. Where did you go? Yeah, boy or a girl? Right. Another one. Total cost. From the total cost, how do you get the conversion cost? From the total cost, how do you get the conversion cost? You can remove non-manufacturing overheads. Non-manufacturing, because total cost includes manufacturing and non-manufacturing. From that, first remove non-manufacturing. Non-manufacturing cost, you remove it. Then you, from the total cost, when you remove the non-manufacturing overheads or non-manufacturing cost, either you use the word cost or use the word overhead. You remove it, then you get the manufacturing cost. From the manufacturing cost, remove the raw material. So from this, when you remove two things, you get all our correct formula of conversion cost, because even the formula can be tested in the exam. Right? So please understand. So write it down. All the students write it down. Conversion cost includes, first write it down, don't copy this. Conversion cost includes all the factory cost, within bracket manufacturing cost. Conversion cost includes all the factory cost, within bracket manufacturing cost, other than, can someone help me? Other than what? Conversion cost includes all the factory cost, or within bracket all the manufacturing cost, other than raw material cost. Raw material is not included. Anyone tell me why raw material is not included? Because it's already included in number. It's already included in number 1. If I include again, it's double counted. That's why not included. Clear, guys? Copy this down. Don't write like this, C, C, B, C, D, C and all. Write properly. Otherwise, later you'll have a problem. So write it down. Conversion cost equal direct labor. You guys are okay with manufacturing account, no? These are manufacturing accounting. I hope you have some kind of a knowledge. Now you're like in the second year now. Second year mean advanced. Second year, you're ready for exams. This year is your exam. Second year. Anyone plan to do third year exam? No, second year. Yeah. Okay, right. So conversion cost is equal to, this is manufacturing account formula, but only raw material is missing. This is manufacturing cost. If I, listen, if I add the raw material, formula is manufacturing cost. Manufacturing cost is equal to direct material, direct labor, direct expense. You call prime cost, right? And another, okay, now I can remember that also. Write down another formula. This is 1, correct, 2, 3, 4. Conversion cost is equal prime cost. But the problem is, inside the prime cost, what is there? Inside the prime cost, what is there? Raw material cost is there. So we have to remove that. Prime cost minus raw material cost plus production overhead. Is it right? Conversion cost? Perfect. Perfect. Conversion cost mean all the manufacturing cost other than the raw material. So raw material is cancelled. Raw material is cancelled. So guys, let me Let me read it out. You don't write like this, you write properly. Conversion cost is equal to direct labor or direct labor, other direct expense, fixed production overhead. Fixed production overhead. The word production is important because non-production won't come. Fixed production overhead plus variable production overhead. Fixed production overhead and variable production overhead. Guys, this production is important. Huh? If I have not mentioned the word production, formula is wrong. Seriously, formulas, our guys don't understand, take it serious, these things. If I just say fixed overhead, wrong. Why? Administrative expense also fixed overhead. No. If you're running an office, a lot of fixed overheads are there. Rent, office electricity, office. You don't record any office expenses here. Only factory. So fixed production overhead is a better explanation. And variable production overhead is a better explanation. Some guys don't take it serious, those terms. Answer wrong, they think your answer is right. See, one word different, one letter I drop it, answer wrong. Overhead mean everything. Production overhead mean factory. Use the word factory, production. Okay guys, this one. Total manufacturing cost minus raw material cost. Don't ever write RM, you will have a problem later. What is RM? Total manufacturing cost. Another word, total factory cost. Remove the raw material cost. Another word, total cost. Total cost means everything. From everything, first minus the non-manufacturing. Non-factory cost minus. Without factory, this is outside cost. Administrative expenses, distribution, this, what is it? Non-manufacturing cost mean what? Or non-manufacturing overhead mean what? Your office expenses are non-manufacturing. Non-manufacturing mean not a manufacturing cost. So total cost will include everything. Total cost will include distribution expense, administrative expense, finance expense, other expense. So from that, remove the non-manufacturing. Non-manufacturing mean what? Distribution expense is non-manufacturing. Administrative expense is non-manufacturing. Finance and other expenses are non-manufacturing. Remove it. Then remove the raw material. Why? Always from the total cost, raw material also need to be removed to get the conversion cost. Raw material is not a conversion cost. Prime cost. Prime cost is what? Direct material, direct labor, direct expense. Material also including the prime cost. Remove the material plus production overhead. Even I have used the word production. Production, another word, manufacturing overhead. Another word, factory overhead. Is that clear? Right. You guys okay with this? Number 1. 3. What is number 3? Other cost. Number 3, other cost. Can now have a problem. Some students will think everything is included. No, all the factory cost is included. All the factory cost is included. All the raw material cost is included. What do you mean by this other? Everything is included. What is other? Louder. Work in progress, wrong. Because work in progress is a different variety. Finished goods is different variety. We are talking about finished goods. Anyone here? Any good students? Students who think they are smart? What do you mean by other cost? What are the other costs here? Huh? I didn't understand. What is it? Unexpected losses you don't ever include in the cost of inventory. That is the next heading. Costs that are not included in the cost of inventory. That's later, not now. That is included in the cost of purchases. Guys, anyone here? Holding cost only I'm going to discuss. Holding cost, in other words, storage cost. Stock holding cost. Holding mean, where do you hold the stock? In a warehouse, in a storage. So I'm going to talk about the storage cost. 1, very good. Very good. 1 is storage expenses. I want to discuss about the storage expense. Another one, before even manufacturing. Excellent. Great. Before even manufacturing, before you come to the factory, sometimes you try to design the inventory. Inventory designing expense. Designing is different, manufacturing is different. When the designing happens, if the significant expense is incurred for designing of inventory, inventory designing cost can be included in the cost of inventory. That's other cost. So one other cost is inventory designing, but some inventories you don't have, it's already designed is there, you manufacture it, then no designing cost. But if you're designing something, if you're research and development, new thing, designing cost, that cost of inventory you can include in the cost of inventory. For example, a new furniture you want to manufacture. If you are manufacturing every day all same furniture, no need to design, no designing cost, because what you have only you are manufacturing. If you are something new design you are manufacturing it, you are going to pay a big amount of money for the designers. Nowadays, you know, interior designer, that designer, this is you have. So if you are designing it, that cost is, you can say, inventory designing expenses. Other cost. What else? What are the other costs? One other cost is inventory designing cost. What else? Second other cost is holding, storage expenses. In your final paper, when examiner asks you a question, storage expenses, is it included or not included? Always say that not included. You don't add anywhere. Only one kind of storage is included. You have to be very careful. Remember, storage can happen after manufacturing. Storage can happen. Normally, you are running a factory. After you manufacture the goods in the factory, you can store it. Next step. That is, you call it finished goods storage. Finished goods storage. You manufacture the finished goods, completed the product, production is over, and now after the production over, you will store it. That storage expense, it's never included in the cost of finished goods. Cost of finished goods mean for you to produce the goods, what is the cost? Cost of finished goods mean not after the production. After the production, how can that be a production cost? After the production, how can that be a cost of inventory? So remember, there are two types of storage. There are two types of storage expenses. All the big companies have storage. All the big companies have the warehouse. So this warehouse expenses, the storage expenses, if examiner is silent in the question, it is always finished goods storage. If examiner is silent in the question, it is always a finished goods storage. Finished goods storage not included in the cost of inventory. Remember, in the next heading, costs that are not included in the cost of inventory, to give this. It's not included, not added, included in the cost of inventory. There may be sometimes raw material storage. There may be sometimes raw material storage. Or in the question they will tell you, this inventory, this storage is compulsory as part of production. Without storage, for example, I'll tell you a classic example, alcohol manufacturing. Alcohol manufacturing, if you want to have that taste, everyone tasted it? If you want to have that taste or if you want to have that quality, you need to definitely what? Come on, store it. You need to store it. If you don't store it, you don't get that quality. You can't make ready-made. Alcohol, you need to store it for many years, right? More it gets older, the better taste. It's more expensive it is, right? So that kind of storage is compulsory as part of production. If the storage is compulsory as part of production, that storage cost, examiner has to tell us. If they just say storage, it comes under this category. So it's never included. But if the examiner says this storage is necessary, this storage is required as part of the production process, then you need to tell storage cost can be included. It's the other cost. So write it down, everyone. Come to the other cost. Write it down. Other costs are added. Other costs are added. Heading is other cost. Other costs are added to the cost of inventory. Other costs are added to the cost of inventory. Other costs are added to the cost of inventory. Other costs are added to the cost of inventory. if they are incurred to bring, if they are incurred, if they are incurred, if they are incurred to bring the inventory, if they are incurred to bring the inventories, if they are incurred to bring the inventories to their present location and condition, to their present location and condition, if they are incurred to bring the inventories to their present location and conditions, to their present location and condition, to their present location and condition. Example, write it down. Cost of designing a product for a customer. 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 Cost of designing a product for customer. Second one, storage cost of raw material. Second one, storage cost of raw material. Storage cost of raw material. Storage cost of raw material. Can you highlight the word raw material? Storage cost of raw material that are necessary, storage cost of raw material that are necessary for the production, that are necessary for the production. Storage cost of raw material that are necessary for production. If examiner is silent, will you include storage cost? No, because if they are silent, it is the finished goods storage. Finished goods storage is never added to the cost of inventory. Then finished goods storage cost, where do you record? In the profit or loss statement. Finished goods storage cost is not recorded in the inventory cost. It's not included in the inventory cost. It is recorded in the profit or loss statement separately. Okay, guys, how many elements of cost of inventory? Can you name them? What are the three cost of elements of inventory? Three elements. Cost of purchase, cost of conversion, other cost. Very good. How many we have learned up to now? There are 8 points. How many points we have learned out of 8 points? 2 points. One is definition. Another one, we have learned only 2 points. Definition and costs that are included in the cost of inventory. Third point is simple. Number 3 heading. Number 3 heading. Number 3 heading. Too cold or what? Too cold. Right. After this point. What is the heading, guys? Number 3. I'm not going to give you all know the points. Write down. What's the third point? Costs that are not included. Costs that are not included. Costs that are not included in the cost of inventory. Costs that are not included in the cost of inventory. That are not included or not added in the cost of inventory. Guys, some students will think, no, generally, I also said that. I also said that all the factory costs will come. It was wrong. Some kind of factory cost will not come as part of the cost of inventory, not added to the cost of inventory. You're running a factory, generally, factory cost will come. Factory cost is part of the inventory cost. If you are manufacturing goods, all the factory expenses, factory rent, factory electricity, factory water, factory telephone, factory insurance, what you have done in manufacturing account, all of them are generally included in the cost of inventory. That's correct. But there are one category of factory expenses cannot be included in the cost of inventory, also cannot be included in the manufacturing account. This is, I'm teaching manufacturing also one point. There are some kind of factory expenses cannot be included in the cost of inventory because they cannot be recorded in the manufacturing account. What kind of expenses? Connected to factory. Connected to factory, but not recorded in manufacturing account. Come on, everyone here. Cost connected to factory, but not recorded in manufacturing account also. Not recorded in manufacturing account, not recorded as part of inventory cost also. Any one of you here? Nobody? Very bad. You answer that, you can go. You answer that, you can go. If you don't answer, you just say. Guys, come on. What are the cost of factory expenses or costs that connected to factory, not recorded in manufacturing account, also not part of the cost of inventory? Guys, assume, right, there are strikes inside the factory. Can happen, anything can happen, right? Labor strike or labor fight, no strike. Inside, everybody has come, union, two groups. Inside the factory, two groups. One small factory, two different groups inside that. They have fought. Eventually, factory is destroyed. Factory is destroyed. Furnitures are destroyed. Machineries are destroyed. They damaged a lot of damages. Do you think we are very happy? It's a good thing. It's a very bad thing, right? It's connected to the factory, but you never include that in the cost of inventory, and also you never record that in the manufacturing account. It's not manufacturing, even though it's connected to factory. What else? You illegally import some materials. Illegal, right? Without proper approval, you have taken it. Entire inventory is seized, right? Now government has stopped the imports these days. Legally, they have stopped it. You can't take down. Some guys have no, they will take the risk. And all the goods were got caught. Everything is seized. Government is not releasing anything. We are not happy. That is a loss connected to the goods, connected to the raw material. And a lot of penalties can happen. Compensation, penalty charges, all these abnormal things, what you said, unexpected. Sometimes purposely you do and say unexpected, right? There are unexpected, we call it better word, abnormal. Abnormal losses, unexpected losses that arise when you are running a factory. Labor strike, we don't expect. Fights, we don't expect. Penalties and compensation, court cases, we don't expect. Assume huge fire inside the factory, all your goods were destroyed, raw materials. Your raw materials were destroyed due to fire or flood, some natural disasters. Inside the factory, what is it? It's a loss. Can you record our value of inventory increases because of the fire? If you can add to that, inventory mean value of the inventory increases. Do you think our asset value increases when there is a fire? Because inventory is an asset. Inventory is an asset. Never. Penalties are bad. Fire is bad. Flood is bad. Natural disasters, anything bad. Try to understand abnormal losses. If you come across in any exam question, they are not included in the cost of inventory. So write number one. Number one, write abnormal wastage of materials. 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 Labor. Abnormal wastage of materials. Labor. No, you can continue as like one sentence. Huh? Abnormal wastage of materials, comma, labor, and other production cost. And other production cost. Some students will think, now only I said production cost is, I said abnormal wastage of material, labor, and other production cost. If you want, you can write penalties, damage losses, goods damaged, penalties, strike losses, lot of things in abnormal wastages, right? During this pandemic period, right, lot of orders were cancelled. Some people have filed a case against the company. Actually, I know you can't run a factory, right? Impossible to run a factory, but they are charging some extra penalties because of that. We couldn't pay for the employees. Sometimes we make employees redundant. Some factory employees, we tell them to go home. No jobs. They lose their jobs. Then they file a case against the company. Then you have to pay extra compensation and penalties for those employees. All are abnormal wastages. We never expect that. So that is not added to the cost of inventory. Not added to the cost of inventory. Do you understand it? Abnormal wastages? Yes. Second one, write down. Second one, write what I gave. Storage expenses. Second one, write storage expenses cannot be added. When examiner says storage expenses, generally what? Finished goods storage. Write down storage expenses within bracket, write number 2. Number 2, write second abnormal, second not abnormal, second cost which cannot be added. Write storage expenses within bracket, write finished goods storage. Third one, write general administrative expenses. General administration expenses. Third one, write number 3, general administration expenses. General administration expenses within bracket, write office expenses. Normal office expenses you can't add to the inventory. Number 4, write down. Number 4, write it down. Selling and distribution expenses. All kind of marketing expenses you can't add. Selling and distribution expenses. Any other general expenses. Number 5. Any other general expenses not connected to inventory. Any other general expenses not connected to inventory. Any other expenses not connected to inventory. Do you understand it? So administration expenses, don't add. Marketing, selling and distribution expenses, don't add. Abnormal wastage, don't add. Storage expense, don't add. Clear? Are you all okay with that? How many headings we have completed? 3. Again, quickly name the 3. Definition of inventory. Second, costs that are included in the cost of inventory. There are 3 types. Then the last one we have discussed. What is it? Costs that are not included, not added to the cost of inventory. Guys, 4th one. Can you guys tell me what is the 4th one? NRV of inventory, net realizable value of inventory. The importance of that I will tell you. The importance of that I'll tell you later. Right? But heading right down. NRV. We call it net realizable value. Net realizable value of inventory. Guys, any students tell me what is NRV mean? Cost mean 3 things I gave. Cost of purchase, cost of conversion, and other cost. Cost of purchase, cost of conversion, and other cost. Any students tell me when you are calculating the cost of inventory, VAT you add or don't add? VAT. VAT, do you add or you don't add? Depends. Excellent. Depends on what? Registered or not registered. Registered, we don't add. Non-registered, we add. Clear? Good. Very good. Tell me what is NRV? How do we calculate this NRV? Estimated selling price minus estimated selling. There is another small thing I will add further. That point is correct. But what's another name for NRV? Net realizable value, another name? Write down another name for NRV. Net selling price. of the inventory. Net selling price, another name for NRV. Net selling price of the inventory. Another name, if you want, fair value less cost to sell. Fair value mean normal price, market price. Less, fair value less, cost to sell. Fair value less, cost to sell. Fair value less, cost to sell. So any one of these words are okay. How to calculate the NRV of the inventory? Okay, what if examiner asks you definition of NRV? Sometimes in your final paper, they can ask, define NRV of inventory according to Lanka Accounting Standard 2. Some guys, we don't know definition. Write the formula in words. Normally formula is an equation. You write that in words, that's a definition. First let's study what is the NRV formula. NRV is equal to estimated selling price of the inventory. Estimated selling price of inventory minus two things you can minus it. What are two things you can minus? From the selling price, normal price, what you sell the products. If you are making furnitures to sell, selling price of furniture, your estimated selling price of the furniture. If you are making two things you need to minus. One is estimated cost of, estimated mean past cost or future cost. Everyone, past or future cost? Future cost. Remember, past cost you never add it. Past cost you never include here because past cost is included in the cost of inventory. Any past cost, already incurred cost included in the cost of inventory. This is estimated cost of completion of inventory. What do you mean by this? Any students tell me what is the meaning of this? Estimated cost of completion of the or repairing expenses, you must minus it. Another one, estimated selling expenses. That everyone knows. Selling expenses mean future advertising expenses, future sometimes commission you have to pay, after sale commission you have to pay. So future advertising, sometimes you do deliver it. Sometimes, you know, when you sell it, you are the one who is going to deliver the product. So future transportation expense. Future delivery expenses is a selling expenses. Future commission payment is a selling expenses. Future advertising you're going to do for sell it, that's a future expense, selling expense. So write it down. Some examples, better to write. Better to write some examples. Selling price, everyone knows. Everyone knows what is selling price, but these better write few examples. Write down example for this. Future modification expense of the product. Future modification, that's I have explained it, the word estimated. Estimated mean future. Future modification expense of the product. Example of this. Example of this. Future modification expense. First of all, quickly copy down the formula. Net realizable value formula, highlight this formula. Guys, wait. Write the examples. If you all can, three examples, write it down for each. Anushan is there. Alta. Right. Estimated cost of completion. One example, right? Estimated modification expenses. Estimated repair expenses. Estimated modification expense. Estimated repair expense. Estimated examples, right? Estimated modification expense, estimated repair expense. Give me one more example. Huh? Cost of completion, estimated packing expense, maybe. Sometimes you never sell it without packing. Sometimes you will have the product without packing, but you will never sell in the future without packing. In the future, you will do packing. So it's a future packing expenses. Then okay. Guys, selling expenses, write it down. Future advertising, estimated advertising, estimated advertising, estimated advertising expense, estimated commission expense, estimated commission expense. Another one, right? Estimated delivery charges or transportation expense. Estimated delivery expense. So if you come across all these future expenses, you must deduct it from the selling price. Then you get the NRV. NRV, in other words, net selling price. We have learned something called NRV, net selling price. Why we have to study this? What is the importance of learning this? The importance of learning this, you will get it from the next topic. Not next heading. What is the next heading? Yes, write down the next heading. Measurement of inventory. Is it number 4 or 5? Yes, 5. Write down. Number 5, all of you write it down. Measurement of inventory. Guys, all the students, important point. There are 2 concepts talk about. Accruals concept, matching concept, materiality concept, realization concept, substance over form concept, prudence concept, historical cost concept, periodicity concept, double entry concept. You all remember concept? Consistency concept. At least, right? Some concepts are there. What are the concepts that talk about inventory. Excellent. Prudence and historic. There's another one better than historic. Historic concept, correct, but it's mainly focused on the non-current assets. What are the two concepts which talk about inventories of the business? You know, this is the first question of 2019 paper. Take the 2019 paper, first question. Page, what's the page number, guys? What's the page number? 13. Page number 13, first question. Sometimes, you know, certain questions which I generally ask, it's important, very important. This is last year paper, 2019, 20, you know. Your one is, okay. Tell me, students who don't know. You can't, you know, suddenly in the exam, you don't get the you know, if you don't remember, out. Guys, please listen. Two concepts which talks about inventory, remember them. One is prudence. Prudence is the best, number one. If examiner asks one, say prudence. Second one, matching concept. Why inventory is not an expense? Now we call it no expense or asset. We always have the argument between this, assets or expense. But if you ask me, what is inventory? Guys, can you all see the video now? Is it all right? Okay, sorry guys, sorry about it. All right, tell me. Normally when you spend money, it can be an expense. Certain electricity spending, generally an expense. Sometimes when you spend, it becomes an asset. Why is that? Remember, matching concept only talks about this. All the students pay attention. All the students, please pay attention. Important point I'm going to explain to you. Connected to matching concept, also it's LKS 2. If examiner asks you the standard, Lanka Accounting Standard 2. If examiner asks you the concept, this one, it's matching concept I'm explaining. Please pay attention, all the students. You don't think this way, but what I'm telling you is 100% accurate and correct information. You don't believe it, electricity is an asset. Salary is an asset. Depreciation is an asset. But try to understand, there are circumstances, electricity becomes an asset. Depreciation becomes an asset. In which situation, think like this, you are running a factory, and you produce 10,000 goods in the factory. 10,000 units of the goods you produce in the factory. You spend for these 10,000 units, production units, you spend 10 million rupees. You spend 10 million rupees to produce these goods. This 10 million rupees includes raw material expense. It includes direct labor, salary paid for the laborers. It includes direct expenses. It includes all the production overhead. When you say production overhead, electricity is included, rent is included, depreciation is included, manager salary is included. It includes insurance of the factory. So you guys know, I don't have to tell you what are the factory expenses, right? Factory electricity, factory water, factory telephone, factory insurance, factory manager salary, factory stationery, all of them we call production overhead. Production overhead we call it. All of these, if you ask me, what is it? It's an asset. You won't believe it, but that's true. This is an asset. Why? Because you produced the goods and kept it in the warehouse. All the goods have gone to the warehouse. Then goods are in the warehouse mean you haven't sold it yet. You're going to sell in the future. So anything that you get the future benefit is expense or an asset. You produce something by incurring 10 million rupees. The 10 million rupees include the factory rent, factory electricity, material cost, labor cost. Everything is included in that 10 million. And after you produce the goods, you haven't sold a single product. Assume it's pandemic period, right? You haven't sold it anything, no business. Or everything you produced and kept in your warehouse. How do you call this 10 million another word? 10,000 goods, what's another word? Inventory. Or you call it stock. If you ask me now, what is the cost of the goods? What is the inventory value? The inventory value is 10 million. What does that 10 million include? Factory electricity, factory water bill, factory telephone bill, factory rent, factory insurance, right? Raw material expenses. The three expenses included: cost of purchase, cost of conversion, and other cost. What is this cost? You think expenses, but they are not expenses because it's in the store, it's in the warehouse. The moment it's in the warehouse, what do you understand? You're going to get the benefit not now because it's in the stores. We are going to get the benefit in the future. Everyone know definition of an asset. What is the definition of an asset? Asset is something that's going to give a benefit in the future. So this is something going to get the benefit in the future. So all these 10 million, electricity, rent, water, telephone, depreciation, everything, we call one word: inventory cost. The inventory cost is what? A current asset. Inventory cost is an asset. In that asset, all these normal expenses are there. But we don't record them as an expense. We record them as an asset. Which concept says this? Matching concept. Matching concept only tells us if you keep the stock in the warehouse, it's an asset. In which situation this 10 million will become an expense? If you have sold it already. Sold it means goods are not with you. All the 10 million goods, you sold it. You don't have any goods with you. Then you can't get the future benefit because you sold it. Then this 10 million, we call in accounts cost of sales. The word for this, see, same 10 million becomes the cost of sales. When you're calculating gross profit, you use 10 million. If you are keeping in your warehouse, this 10 million is a current asset. You call it inventory. If the same 10 million, everything is sold to customers, the 10 million another name, what's another name for 10 million? Cost of sales. Everyone know cost of sales? No? This is the cost of sales. What is cost of sale if you ask me? It isn't. Cost of sale is what? Cost of sale is a expense. Some students will think expense mean only distribution expense, administrative. Cost of sale is a main expense. Sale is a main income. In organization, main income is sales. The main expense is cost of sales. That's how we calculate the profit. Main profit, gross profit. So this 10 million, so please understand this explanation is given in LKS 2. Also this explanation is given in matching concept. Matching concept says if you keep the goods for future benefit, that goods are recognized as an inventory asset. If you sold that goods are recognized as, the cost of the goods are recognized as a cost of sale. Both explanation is given in matching concept. So tell me two main concepts which talk about inventory. Two main concepts talk about inventory. Prudence concept, that's the main one. Another one is what? Matching concept. Are you all okay? Did you all understand that? In which situation inventory become an asset? In which situation inventory become an asset? If you manufacture and hold the inventory. If you manufacture and keep the inventory. In which situation that same inventory become an expense? If the inventories have been sold, this word, past sold, then we call that 10 million cost of sales. Then cost of sale is 10 million. Assume you 10 million cost of sales goods, you sold it for about 15 million. You always sell it at a higher price, no? Otherwise no point running a business. 10 million is your cost, but you sell it for higher price. Then the difference is what we call it? Sales minus cost of sale. What is it? Gross profit. Is that clear? Did all of you all understand that? Yes. Now, this is I'm explaining, I just explain it, ask a question, right? This is not the heading you all have taken down. This is not the heading you all have taken down, but this, I ask a question, what are the two concepts connected to inventory? Majority of students gave me the wrong answer, right? Okay, so now I will give you that also. First, write it down, a very important point. What's the heading you all have taken down? Tell me. What is the heading you all have taken down? All the students. What is the heading you all have taken down? Measurement of cost of inventory. Write it down. According to LKAS2, otherwise you will forget the standard, that's why I'm giving. According to, everything is according to LKAS2 only. According to LKAS2, guys, can you all students who are online, is it visible? Can you all see, guys? Yes. All right. Write down, according to LKAS2, another word, write down, prudence concept. Highlight it. I don't have to give this. I'm just to recall. I'm telling. LKS2 within bracket write prudence concept. Prudence concept. Now you guys know both. Standard also you know. This is unit 11. This is unit 5. Remember, get good marks. Right. According to LKS2 or according to prudence concept, same point is explained. The inventories are measured according to LKS2 or prudence concept. Inventories are measured at the lower of cost and NRV. Inventories are measured at the lower of cost and NRV. Inventories are measured at the lower of cost and NRV. Just a note, write it down for your reference purpose. There are two concepts, accounting concepts talks about, there are two accounting concepts. There are two accounting concepts. Talks about inventory. There are two accounting concepts talks about inventory or measurement of inventory. Number one, you can write prudence concept. Number two, you write down matching concept. This is just for you, not LKS2. Extra points I'm giving. There are two concepts talks about or explains about measurement of inventory. Number one is prudence concept. Number two, you can write matching concept. Number two, matching concept. Right. Now, guys, I'll explain to you. I'll give you a small example on this. This is important. All the students, please write down below that. Example one. Example one. Example one. Write it down. A company's inventory details, company's inventory details at the end of the year are given below. Company's inventory details at the end of the year are given below. Company's inventory details at the end of the year are given below. Normally, end of the year mean opening stock or closing stock. Everyone tell me. Closing stock. Very good. Write down. Cost of inventory. Cost of closing inventory. Cost of closing inventory. Guys, rupees 100,000. Cost of closing inventory, rupees 100,000. Anyone tell me in that 100,000 what is included? Three costs are included. We have studied that before. What are the three costs? Cost of purchase is included. Cost of conversion is included. Other cost is included. Very good. Right? You guys know. Sometimes in exams, they give it all together. Simple. Cost is 100,000. Then write it down. Next point. Estimated selling price of the inventory. Estimated selling price mean have you sold or not yet sold? Come on. Not yet sold. Still you are having the inventory. Estimated selling price of the inventory. Estimated selling price of the inventory. Rupees 90,000. Wait. Don't write 90,000. Put 1 in front. 190,000. Normal situation, this is what happens. You run business like a not-for-profit organization or profitable organization. How do you generally want to run a business? You want to sell everything like below cost, or you want to sell more than the cost? Obviously, 99% of the business people, they sell the goods, not at losses. They sell it with a profit. Here you're going to sell it with a loss or profit. What is your cost? 100,000. What is your selling price? 190,000. So you will be happy. Why? You're going to sell at a higher price. So write it down another point. Estimated cost of completion and selling cost. Estimated cost of completion and selling cost, 20,000. Estimated cost of completion and selling cost. Estimated cost of completion and selling cost. Estimated cost of completion and selling cost. Rupees 20,000. Rupees 20,000. Simple question. Requirement number 1. Perform the journal entry to record the above closing inventory. Perform the journal entry. Some guy is very bad at accounting. Perform the journal entry. Perform the journal entry. Double entry. Perform journal entry to record the above closing inventory. To record the above closing stock. That's it. Simple question. Okay, what's your answer? First of all, some students will have a problem, don't know double entry. That's the first problem. Second problem, don't know the value. Two varieties. Some guys don't know debit credit. Some guys know debit credit, amounts problem. But measurement has a problem. Remember, all the students, please pay attention. Whenever you are given some stocks and asked to record in accounts, whenever you are given some stock and asked to record in accounts, you should always do this. Get the cost of the products and get the NRV of the product. Then whichever lower, whichever you compare both, right? Whichever the less amount, the lower amount, that amount only you should record in accounting when it comes to closing stock. So I have given you the cost of the product. How much the cost of the product? 100,000. I have given you NRV because you can find out the NRV. You can find out the NRV, right? Estimated selling price minus estimated selling cost. Can someone tell me what is the estimated selling price? 190,000. Selling expense? 20,000. So still you're happy to have these goods. Why? Every time you will be happy to have the goods, right? Because you are planning to get more benefit from the goods. So you're going to sell for higher price. Your cost is only 100, but you're going to get the benefit in the future after spending future expenses. After spending, still you're happy, right? You're going to get 170,000. You call that NRV. Now a stupid question I'm asking, which is lower? Which is lower? Which is lower? 100,000 is less or 170,000 is less? Guys, which is less? 100,000. Whichever less amount, lower amount, that is the final value of the goods. So some students will think goods are recorded always at cost. No. You have to compare both. You have to compare the buying price and selling price. Buying price and the selling price. See which one is the lowest one. Take that and record it. Now you know what is the final value of the goods. The lowest one is 100,000. Lowest one is 100,000. So the final value is recorded as 100,000. Second point, double entry. 100,000 only I am going to record. Double entry. What is the double entry for inventory? Inventory is an asset. Assets are debit or credit. You should know basic things. Assets are debit or credit? Debit. So write down the double entry. First of all, write down a point like I have written. You can record the cost, record the NRV, and say whichever lower is the final value of the inventory. Whichever lower is the final value of inventory. Within bracket, write current asset. Within bracket, write current asset. This part which I am learning, teaching you, very important for the exams. Very, very important for exams. There's some logic behind this. You need to understand that logic also, right? I will teach that logic later. First, quickly, copy this. Cost I have given. NRV I have given for you to calculate it. So you calculate the NRV. And say whichever lower is the final value of the inventory. Inventory, why I have written current asset? You guys know inventories are current assets. Inventories are current assets, right? Now, after you have taken this down, you have know the final value is 100,000. That's the lowest value. Comparatively, the lowest value is 100,000. Take that 100,000 and write the double entry now. Now the double entry for inventory account debit, now the word stock account debit, now the word current asset debit, now the word current asset. Some students will write CA, later say that chartered accountant, CA. Current asset, better you write current asset. So inventory account debit, stock account debit, or asset account debit. Debit 100,000. Where do we credit the trading account? Okay, very good. Because trading account, within bracket, write it down in the cost of sales calculation. Inventory, other entry goes to cost of sales calculation. Cost of sales calculation. So the double entry would be two places you record inventory. One is in the statement of financial position. Statement of financial position. Current asset. This one goes to statement of profit or loss. Statement of profit or loss. You guys know in the profit or loss, we calculate always cost of sales. In that cost of sales, we record closing stock. Closing stock is 100. Please write it down two places. Profit or loss and cost of sales calculation you record. Closing stock 100. You know, any students want to know this in this one? Opening inventory plus purchases minus closing inventory. So this closing inventory is 100. Okay? Write it down. Example 2. Example 2. Example 2. Did you complete example 1? Example 1 is a useless example. Seriously. No learning on that. Why? In your final paper, they won't give this. Profitable inventories, they don't give. They will give you some loss-making inventory that you have. Definitely. When they are testing, they will test the loss-making inventory. Then accounting will be different. Write down example 2. Inventory details of a company are given below. 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 Write down. Be given below at the end of the period. given below at the end of the year. At the end of the year. Write down first point. Cost of closing inventory. Cost of closing inventory. Cost of closing inventory. 100,000. I'll give you the same amount. Cost of closing inventory 100,000 like before. First example also 100. Then write estimated selling price of the inventory. Estimated selling price of the inventory 92,000. Now something is wrong in this inventory. Tell me why. Why estimated selling price 92,000? Something is wrong in the inventory. You bought it for 100. Your total cost is 100. Why you are planning to sell it under cost? Why? What may be the reason? Under cost you are going to sell it. Maybe damaged. Maybe almost expired. Maybe some issue with the product. Suddenly demand has dropped. Nobody's want that product, but you want to sell it off. So due to some reason, damaged products, maybe this can be a damaged product. This may be an outdated product. Near expiry date. When you go to Food City and Skill Super and all, sometimes they will tell you 70% off, 50% off, like free. Take it free and go. Our guys are 70% off, 50% off, but you look at the expiry date, sometimes next week expired. Within a week expired. Within 3 days expired. So if they keep it, they have to throw. Rather than throwing it, they can give it to the customers under cost. 70% discount, 50% discount. Buy one, get one free. Right? So they can give like that. That is nearing expiry date, you can sell it. So why people are selling at low price, you know. I'm giving you the reason also. Right. So write it down. Estimated selling cost of the inventory 5,000. Estimated selling cost of the inventory 5,000. Estimated selling cost of the inventory 5,000. Good question. Perform the journal entry. Same question. Very good question. See, the requirements are same. Perform the journal entry, but this is put an asterisk mark for this example. Lots of students make mistake on this. Perform the journal entry to record the above closing stock. Requirement, write it down. What is the requirement? Perform the journal entry to record the above closing stock. Right? Some students will write the double entry like this, 0 marks. Some guys memorize all closing stock, same double entry. Debit stock, credit trading account. This is normal double entry. This normal double entry cannot be applied for that example because you are going to face a loss on this inventory. Everyone tell me, first of all, when it comes to inventory, what do you do first? Get the cost, get the NRV. That's the number one step that you do. Can someone tell me what is the cost of the inventory? 100. What is the NRV? Can someone tell me what's the NRV? NRV, how do you get the NRV? Estimated selling price minus estimated selling cost. Estimated selling price minus estimated selling cost. What's the amount? 92 minus 5. Is that right? What's the amount? 87,000. Is that right? Selling price 92, selling cost 5, so NRV 87. Now the stupid question, which is lower? Whichever lower, only we always record the value of the inventory. Which is lower? The 100 is lower, cost is lower, NRV is lower. Buying price is lower, selling price is lower. Selling price, NRV is lower. Whichever lower, we take the final value of inventory. So how much it is? 87. 87. Now some students are there. They will take this 87 and write the double entry. Debit stock 87, credit trading account 87, 0 marks. No marks. What's the double entry? Anyone? Ananda? Inventory account debit 87,000. Excellent. Stock written off, inventory written off. Inventory written off or stock written off, debit 13,000. We are expecting a loss here. We bought it for 100. In accounting, a very important logic I want to tell you here. All the students pay attention. If you are expecting a profit in the future, you cannot record that profit in accounting. Not allowed to record. Otherwise, everybody will expect the future profit and record now itself. Remember, there's an important point you have to remember it. If a company expects a profit in the future profit cannot be recorded in accounting, not allowed to record. Future profit cannot be recorded. That's why in the last scenario, we expect a profit. Example one. Example one, we expected a profit and that profit is not recorded. But look at this example. We are expecting a what? Loss. Remember, I'll repeat it again. If you expect a profit in the future, we can't record that future profit. However, if you expect a loss in the future, that loss need to be immediately recorded as an expense in the current year. So if the future loss we're expecting, our buying price 100, our net income 87, what is the loss we're expecting? Quickly. What is the loss we're expecting? 13,000. Our cost is this and net benefit is 87 and we're expecting a loss 13. And this 13,000 should be recorded as another debit. And we call this inventory write-off expense. Look at the double entry, complete change in the double entry. This goes to current asset, same thing. Current asset, if you ask me how much, 87. Current asset, if you ask, 87. This one is other expense. Other expense in statement of profit or loss. The category of the expense we call, there are different categories. Distribution expense, administrative expense, other expense. This is other expense category. Then you credit. How much, guys? Total debit should be equal to credit. How much credit? Debit is 87, another debit is 13. How much the total credit then? 100. Why? Debit should be equal to credit. Where do you credit it? Trading account. Trading account. In other words, this is recorded. This 100,000 is recorded in the cost of sales calculation. See, the previous example, how many entries? If you're expecting a profit, how many entries? Only 2 entries. That profit is never recorded. But if you expect a loss, what is it? You should record the loss as an expense. That loss name is inventory write-off expense. Do you understand it? All of you? Debit, current asset, please write, this is current asset. Current asset, this is expense. This is cost of sales calculation. You record it. So in the cost of sales calculation, you always record cost of the inventory, not the lower. Lower of the two is not applicable in cost of sales calculation. Whenever you do a cost of sales calculation, the lower of two, you never apply it. You take always the cost. But if you ask me what is this 100,000, it is the cost of the inventory. So even though there is a lower cost of sales calculation, you don't record the lower one. You always record the cost of the inventory. So write 2 notes or 3 points quickly before we wind up. 3 notes write down. First note, write. First note, if a company expects a future profit, or if the company expects a profit on future sale of inventory, if a company expects a profit on the future sale of the inventory, if a company expects a profit on the future sale of inventory, that profit cannot be recorded. That profit cannot be recorded. That profit cannot be recorded in the current year accounts. That profit cannot be recorded in the current year's accounts. That profit cannot be, sometimes in your final paper, they purposely give a profit. Our guys will think what to do. Leave the selling price. This is not needed. If this is 120, 130, more than this, more than the cost, completely ignore this. Only take the 100 and record debit 100, credit 100, chapter closed. 100 is recorded both ways. Profit is never recorded. But they give it to confuse you. That's the point I'm giving you. If you are expecting a future profit, ignore it. So write down that future profit is not recorded in the, guys, not recorded in the current year's accounts or current year's financial statement. Second note, write down. If a company expect a future loss, if a company expect a loss, if a company expect a loss on the future sale of inventory, if a company expect a loss on the future sale of inventory, that loss should be immediately recorded. That loss should be immediately recorded in the current year's financial statement under other expenses. That loss should be immediately recorded in the current year's financial statement under other expenses. That loss should be immediately recorded. It's a future loss, but you record immediately, right, in the current year's financial statement. It should be recorded. That loss should be recorded under other expenses in the statement of profit or loss. What is the name of the loss? How do you call it? The name of that loss. Every expense has a name, no? What is the name of this? Write down. It is known as inventory write-off expense. This loss is known as inventory write-off expense. Record under other expense. Number three, when calculating cost of sales, we should always take, tell me everyone, when calculating cost of sales, we should always take what? Lower of the two or the cost of the inventory? Not lower. Don't take lower. When calculating cost of sales, is it lower or the cost of inventory? What is this 100? Lower is 87. But cost of sales calculation, which one is used? When calculating cost of sales, we should always take, come on, we should always take cost of the closing inventory. Cost of the closing inventory. Within bracket, write down, not the lower of the two. Cost of the closing inventory, not the lower of cost and NRV. Not the lower of cost and NRV. Some students will take the lower, answer will be wrong. Don't take the lower, always take the cost of inventory. Is that clear? Guys, the revision after 20 minutes. Revision or the theory I will be doing. Guys, important point. Any of your friends who are absent, another option of studying the accounting standards, they can come to Sigma. Sigma, I'm doing the same accounting concept, right? Tomorrow at 10:30. If anybody got absent for accounting standards, please pass a message, right? If any students get absent for accounting standards, I'll be starting with last week one. SLFRS 15, I'm doing tomorrow 8:30. Pass a message to all your friends. You guys don't come, right? Any students who couldn't come today, they can come for Sigma. Timing Saturday 10:30. Saturday 10:30. Tomorrow 10:30. Okay, guys. So we'll start the revision another half an hour's time. The revision class today, I'm going to do value-added tax and debtor reconciliation statement. That connected to data reconciliation statement, important areas. So can stay. You understood? Today's one is okay. Huh? Standards. Difficult. Especially inventory. Theory part is okay. Which one is complex? Theory is complex. Huh? Customer. Let me now slow in another.
Your speed is good.
So speed no one put
Speed okay, sir.
Okay. Absorb.
Yeah.
Boss. You understood, no?
Start.
Okay. எல்லா ஸ்டைலர்ஸும் படி உட்கார்ந்து ஒன்றும் ஸ்ட்ராங் ஒரு குட்டா ரமணா also good. Sir, tomorrow what is it? Tomorrow SLFR is 15. Today's lesson? No, yesterday's. Today's lesson SLFR is 15. Long breaks. Today LKS 2 inventory. This is another inventory stocks. Knowledge sales SLFR is 15. So what is the 10:30? Fees and on fees normally include the fees. Today also நீ இங்க வேறேவா ஒன்னும் மிஸ் பண்ணிக்கல செட்டப் come setup and month now padina 1000
Currently I'm doing exchanges. Probably I'll be having sometimes private classes. So if I have something like that, can I join Sigma?
You need to come and join there. They will ask you most of them will ask you to make the payment. It's the same branch, not a problem. You will have a class sometimes.
Yeah, because I'm doing HNS, so sometimes they might have.
If they have the class, you let me know. I will see that I can take you with me. You don't have to pay. If I can take you, you have to pay.
Okay. And also to the revision, how does it work?
Revision is very important. In today's class, if you stay and realize it, I'm going to do the back account, data reconciliation, data control account, everything. I'm going to discuss it today. Right? I will do it little slow there. Right? Little slow for you to understand more. And that's normally this class will be from 3:30 to 5:30. Then I'll give them a half an hour break. Then 6 to 8. So today what I will do is 6 maybe 15 to or 6:30. Now it's 6 o'clock. 6 so 6:30 to 8:30 to be available. So if you want, you can just stay.
Can I say one word? Because I didn't know about it. 7 o'clock I had to go out. My friend's place.
Wedding.
No, he's giving just a small dinner.
Yeah.
Yeah.
You go at 7:30. 7:30. 6:30 to 7:30.
Some of my friends, you know, Hamdan?
Yeah, Hamdan.
Yeah, so he'll be coming to collect me and go here.
Then you come at 7:30. Okay, 7:30 is better.
Okay. So today, what time the class is?
8:30. Why? You go early.
No, sir. My father can't reach me.
What time? 8:15 or 8:30? 8:30. 8:30. Today's one or
Yes.
tough?
Shit.
Hard.
means there's a lot of to take.
Absorb.
Yeah.
That is. I can further slow down explanation, but my explanation is speed or how is it? So if I
Today
slow down, it's okay, no?
yes.
Huh? Sometimes it's a bit boring. That's why I didn't slow down. Next class I'll try to slow down. Uh, Theory, you have a problem or calculation? Or both? Both. Today's lesson, you take the lesson and just go through the lesson. This normally stock goods. Won't be difficult. Definition won't be difficult. Definition of inventory won't be difficult. There are certain areas it won't be difficult. Just go through that. If you have any doubt, come a little early next week. I will explain to you. Huh? Huh? Lesson every day. Huh? தெரியாத விஷயங்கள் இருக்குன்னு எப்படி இருக்கும் ACC knowledge கொண்டு காலையில் போட்டேன் ACC lowest value you take it and record both first of sales we adjust if you adjust it here no zero marks the gross profit wrong your net profit also wrong then company account everything is wrong
Really? I'm not gonna buy it. I'm 85. I'm not gonna tell you guys all. 160 dollars something just like 100. Home.
Wow.
I know. This woman is pretty old. She has like science, lot of history. Each of them. Yes. Grade one. Grade one. He's down and not. This skin. One last time. You're so unlucky. Time to say that. Okay, so whatever is that. That is looking around.